Snap has seen its market capitalization fall by roughly 33% from $30 billion down to $19 billion as of this recording. But what's Snap actually worth? What's an intrinsic value for Snap stock? Or what's a fair price to pay for Snap stock? That's the question I'm going to address in this video by conducting a discounted cash flow valuation of Snap stock. I'll share with you precisely where I'm getting all the numbers and estimates and assumptions so you can see for yourself and decide for yourself if the numbers are accurate, too high, or too low. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so three of the numbers I'm going to need is Snap's market cap at $19.2 billion, the cash and equivalents balance at $965 million, and Snap's total long-term debt at $3.641 billion. I also need the company's shares outstanding figure, which is 1.663 billion as of this recording. And I need the company's beta, which stands at a perfect 1 as of this recording, according to Yahoo Finance. Remember, a beta of 1 means that the risk of Snap's share price is equivalent to the risk of the S&P 500 index. When the index moves up by 1%, theoretically, Snap's stock price should also move up by 1%. It should move at the same percentage as the S&P 500 index is moving. I also need an estimate of the company's free cash flows between 2024 and 2028. And to find that number, I look to Wall Street analysts that are following the stock. They think the company is going to deliver $240 million in free cash flow in 2024. That's expected to increase to $500 million in 2025, to $830 million in 2026, to $1.23 billion in 2027, and $1.56 billion in 2028. Now, this is a robust increase in free cash flow expected for Snap. I'm going to forecast that the company's growth rate in free cash flow slows down considerably after these next 5 years. I'm going to forecast the growth rate in free cash flow falls significantly from this rate, which is over 100% increase in these next 4 years. That's not sustainable to go on for very long, so I'm going to have it slowing down. And I'll share with you precisely how much I expect it to slow down. All right, so now that we have all the estimates and the inputs that we need, we can jump into the valuation model. So let's start with the 2024 estimated free cash flow of $240 million, right? And you can see from 2024 to 2028, I have these estimates input from those Wall Street analyst figures that I shared with you right before this slide up until 2028, the estimate of 1.56 billion. So I shared with you the growth rate of these next 4 years expected is extremely high, right? 114% short-term compounded increase in free cash flow growth for Snap is expected. So I'm going to have that slowing down. I'm going to have that slowing down hugely, down to 15% from 2029 to 2034. I have it slowing down to 15%. And given that slowdown, the cash flows will rise from 2029 at 1.79 billion to 3.604084 billion in 2034. From 2035 to infinity, I have the company settling down to a long-term growth rate of 5%. So let me review that. Over the next 5 years until 2028, the Wall Street analysts that are following Snap, they think its free cash flow are going to grow by a compounded annual growth rate of 114%. From 2029 to 2034, I have this stock growing at a transition period growth rate of 15%. And then from 2035 to infinity, I have the company growing at a long-term growth rate of 5%, which I have it set as equal to the nominal growth rate of the economies where Snap operates, primarily in North America, and it's also operating in international segments that are growing faster. So I have it growing at a nominal growth rate of 5%. This is not adjusted for inflation. This is the nominal growth rate of developed economies worldwide is what I expect to see. All right, so since these are free cash flows forecasted for the future, we need to discount them because money in the future is worth less to us than money today. The way we do that is we apply a weighted average cost of capital to these future cash flows. And the weighted average cost of capital I'm using for Snap is 9.66%, utilizing a capital asset pricing model cost of equity of 10%. And I'm assigning a cost of debt to Snap at 7.5%, with a beta of 1, a risk-free rate of 4.2%, and a market risk premium of 6%. Given the company has a market cap of $19 billion and total debt of $3.64 billion, I've assigned them a target capital structure of 20% debt and 80% equity. So when I apply that discount rate to all of these free cash flows expected in the future for Snap between now and infinity, I get a present value of the company's operations of $43.16 billion. This is the present value of all of the cash flow the company is expected to generate between now and infinity. If we bring those all back to today, applying a discount rate, applying a factor for risk, we get the present value of operations at $43.16 billion. Okay. But to the value of the operations, we need to add the company's cash balance, which is $965 million, and subtract the debt of $3.6 billion. That brings us to a value of equity of $40.484 billion. But we want to know the price per share. What's a fair price per share to pay for Snap stock? And to do that, we need to divide by the number of shares outstanding, which are 1.663 billion. And that brings us to an intrinsic value per share for Snap stock at $24.34. That's how much I think that Snap shares are worth today. Using these estimates and assumptions, this is what I think the business is worth today per share. The market price is actually less than half of that at $11.50. So this suggests a significant undervaluation right now for Snap shares. However, that doesn't mean the market price will ever reach the intrinsic value I have here. The market price could disagree with me forever. And you've seen that happen. Many stocks that I feel are overvalued have persisted remaining overvalued. So the market price can remain under or overvalued for a long time. This is just what I think is the intrinsic value. So that means that at $11, I feel like Snap shares are a bargain, but that they can remain at this price for a very long time. So the market is the market. It doesn't ever have to agree with my calculations of what I think a business is worth.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.